Want to get paid every single month just for holding a few smart investments? Imagine building a portfolio that sends you cash flow like a paycheck without lifting a finger. In this video, I'll show you the 7 best monthly dividend ETFs that can help you do just that. Today we're diving into a topic that's been absolutely exploding in popularity lately: monthly dividend ETFs. ETFs, or exchange-traded funds, are like baskets of stocks that you can buy and sell just like individual stocks. So, in this video, I'm breaking down 7 of the best monthly dividend ETFs that you should consider adding to your portfolio today. Make sure you stick around until the very end, because I'm sharing some bonus tips and insights that you won't want to miss. And hey, while you're at it, hit that subscribe button and ring the notification bell so you don't miss out on any future dividend stock picks. Alright, kicking things off with a bang, we have the Spider Bloomberg one. 3-month T-bill ETF, ticker symbol BYL. BYL invests in short-term U.S. Treasury bills, which are considered one of the safest investments on the planet. This ETF is massive, with over $37 billion in assets, so you know it's highly liquid. And with an expense ratio of just 0.14%, it's not going to eat away at your returns with hefty fees. But here's the best part. BIL is currently rocking a juicy 5% dividend yield. Think of it as a way to park your cash and earn a decent return while you wait for better opportunities, or just want to keep your money safe and sound. So, if you're looking for a solid, low-risk way to dip your toes into the world of monthly dividend ETFs, BIL is definitely worth checking out. It's like the Honda Civic of ETFs, reliable, affordable, and gets the job done. Moving right along to our next contender, we've got the Invesco Preferred ETF, ticker symbol PGX. This ETF is all about preferred stocks, which are kind of like a hybrid between stocks and bonds. PGX specifically tracks the ICE BOFAML Core plus Fixed Rate Preferred Securities Index. We're talking over 200 different holdings across various sectors. PGX is currently boasting a sweet 6% dividend yield, which is nothing to sneeze at. Preferred stocks can be sensitive to interest rate changes, so if rates start to rise, you might see the value of your investment fluctuate a bit. Overall, if you're looking for a way to boost your monthly income, and you're comfortable with a little bit of volatility, PGX is definitely worth considering. It's like the Tesla of ETFs. A bit more risky, but potentially much more rewarding. Alright, let's shift gears a bit and talk about the iShares 7. 10-year Treasury Bond ETF, ticker symbol IEF. This bad boy is all about medium-term U.S. Treasury bonds, which are backed by the full faith and credit of the U.S. government. IEF specifically tracks the ICE U.S. Treasury 7 10-year bond index. This ETF offers a good balance between risk and reward. IEF is currently offering a respectable 3.6% dividend yield, and just like our previous contenders, IEF pays out those dividends monthly. IEF is like the Toyota Camry of ETFs, reliable, consistent, and always there for you. Now, for all you adrenaline junkies out there, let's spice things up with the Spider Bloomberg High Yield Bond ETF, ticker symbol JNK. This ETF is all about high-yield bonds. JNK tracks the Bloomberg High Yield Very Liquid Index, which means it invests in a diversified basket of below-investment-grade corporate bonds. These bonds come with a higher risk of default, but offer juicy yields. JNK is currently serving up a mouth-watering 6.5% dividend yield. High-yield bonds can be volatile, especially during times of economic uncertainty. But if you're comfortable with a little bit of risk and looking for some serious income potential, JNK could be right up your alley. Think of it as the Ferrari of ETFs. Fast, exciting, but maybe not the smoothest ride. Alright, let's dive into the world of senior loans with the Spider Blackstone Senior Loan ETF, ticker symbol SRLN. SRLN invests in a specialized type of collateralized bond called bank loans. These loans are typically made to companies with lower credit ratings, which means they offer higher interest rates to compensate for the increased risk. These loans often have floating interest rates, which means they adjust based on prevailing market rates. SRLN is currently sporting an impressive 8.5% dividend yield. Bank loans can be volatile, especially during times of economic stress. But if you're looking for a way to potentially benefit from rising rates and generate some serious income, SRLN is definitely worth considering. Let's explore the fascinating world of convertible securities with the SPDR Bloomberg Convertible Securities ETF, ticker symbol CWB. Convertible securities offer the potential upside of stocks with the relative stability of bonds. CWB tracks the Bloomberg U.S. Convertible Liquid Bond Index. These bonds give investors the right to convert their bonds into a predetermined number of shares of the issuing company's stock. CWB is currently offering a 1.8% dividend yield. Convertible securities can be complex and may not be suitable for all investors, but if you're looking for a way to diversify your portfolio and potentially benefit from both stock and bond market movements, CWB could be worth considering. It's like the Swiss Army knife of ETFs, versatile, adaptable, and always ready for anything. Last but not least, we have the iShares U.S. Treasury Bond ETF, ticker symbol GOVT. This ETF is the ultimate bond play, offering broad exposure to the U.S. Treasury bond market. GOVT tracks the ICE U.S. Treasury Core Bond Index, which includes a wide range of U.S. Treasury bonds with varying maturities. This broad exposure helps to reduce risk and provide more stable returns over time. GOVT is currently offering a 3.2% dividend yield. This ETF is all about building a solid foundation for your portfolio with a low-risk, income-generating asset. So if you're looking for a way to diversify your portfolio, generate passive income, and sleep well at night knowing your money is invested in one of the safest assets on the planet, GOVT is definitely worth considering. It's like the Rock of Gibraltar of ETFs, solid, dependable, and always there for you. So there you have it, folks. 7 incredible monthly dividend ETFs that could help you generate passive income and reach your financial goals. Remember, investing is a marathon, not a sprint, and building a diversified portfolio with a mix of different asset classes is key to long-term success. If you found this video helpful, please give it a big thumbs up and hit that subscribe button so you don't miss out on any future dividend stock picks. And before the YouTube algorithm whisks you away to another corner of the internet, be sure to check out my next video, where I'll be revealing my top picks for high-growth stocks with the potential to make you a ton of money.